The Australian Financial Review.
Hello, I'm James Thomson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague, the Prince of Poultry, Anthony Macdonald. Anthony, how are you?
Good, James. I'm ready to do some weekend roasting.
Fantastic. Well, this week we unpack the scandal that's engulfed accounting giant PwC. We look at why rising house prices have the RBA worried and answer your question on overvalued private assets in superannuation. But first, Anthony, you had a great column this week on what I like to call the incredible shrinking ASX. Tell us a little bit about what's going on here.
Well, we've got an IPO on, James, which is something we haven't been able to say for the past 12 months. So sort of took it as a chance to look at what's going on in the ASX more broadly and just do a few numbers on just the volume of companies from a dollar value wise that's come off the ASX in the past year or so. Like since last February, there's been $50 billion worth of companies removed from the ASX, snapped up by mostly sort of private capital buyers. That includes things like, Sydney Airport, Crown Resorts, Tassal, AusNet. Then you've got others that are set to go like Origin Energy or Tyro or Invocare. It's very much been one-way traffic. And the IPO market's been shut. That's normally where the source of new companies comes from. So I just thought, I'd do the numbers and sort of add it all up. And it's very timely, this thing, Redox. Redox is the company that's trying to IPO. It's a family-owned chemicals importer and distributor. So it gets all these chemicals that are used to make food and packaging and all different types of things across the economy. It imports most of them from overseas, including places like China, and then distributes them locally. And, this thing's a family-owned business. It seems to be listing for the right reasons. So if anything's going to break the IPO drought, it sort of looks like Redox as long as they get the pricing right.
So just to go back, why have we seen an IPO drought? I mean, usually we see, somewhere between 50 and 100 companies come to the public market in a good year, but that's not happening. Why has there been a drought in the last 12, 18 months?
Yeah, so there's still a few little tiddlers that are listing, little, exploration companies and whatnot. But in terms of like chunky things that actually fall onto our radar, there's been one float worth $100 million or more since the start of last year. The reason why is the volatility in the markets. Investors haven't really been willing to take a risk on a new idea. They prefer just to either keep holding what they already own or buy something they already know rather than put that into a new name. And, to be fair, there are a few floats that did list here just prior to that didn't perform well, and they kind of soured everyone's appetite to buy new stuff.
Yeah. Well, I think it's interesting, Anthony, that you've got $50 billion of companies disappearing, but it's not just the volume, it's the choice, I reckon, for local investors that's important here. So if you want to, copper is the hot thing. It's going to power the energy transition. Everyone wants a slice of it. But at the moment, because BHP's bought Oz Minerals, the sort of last standing large copper producer, it's hard to find a way to get exposure to copper on the ASX.
Yeah, exactly.
And so you've got this problem of choice that investors can't get access to the sort of gamut of investment opportunities out there on the local market. It's that's a bit of a worry, I reckon. Yeah,
the next thing down from Oz Minerals is Sandfire Resources, and that's nowhere near the quality or the size or the scale or the prospect that Oz Minerals was. Anyway, like one of the other aspects of the ASX is the unevenness, which is something you wrote about this week, James.
Yeah.
Investors are sort of expecting big things from a small group of companies, and it's those companies that seem to be bossing the market around, isn't it?
That's right, yeah. But some great numbers from Yarra Capital Management, the funds manager out of Melbourne. So industrial companies on the ASX, so that's really anything that's not a miner or a bank, they account for about 37% of the ASX 200. So it's a pretty chunky group. Now, if you look ahead to their 2024 financial year earnings, 70% of the increase in those earnings is going to come from just 4 companies. That's Transurban, that's NextDC, CSL, the big blood company, and Xero, the accounting software business. So we're really relying on a small group of companies to power earnings over the next year. And that goes to the unevenness of the economy. What Dion Hershen from Yarra Capital is talking about is sort of localized recessions where the aggregate economy and the aggregate share market looks okay, but you dig in and you've got building construction going terribly, retail going terribly, little pockets of pain that investors should be trying to miss. And yes, the alternative is that you sort of get on the bandwagon and crowd into these stocks that everyone loves. The problem there is that they're quite expensive, so you could end up overpaying for them, and that could weigh on your returns over time. So it's a bit of a conundrum. So we've got this shrinking market and then this uneven market on top of that.
Let me guess, and all of it equals a stock pickers market?
Yes, as is always the case, stock pickers like a stock pickers market. That's very true. But I think there is a lot of dispersion at the moment. There's a big difference between the companies that are going well in the market and going badly, and even in a certain sector, there's dispersion between the companies going well and badly. Speaking of which, Anthony, we did have a couple of results we should quickly touch on. What results stood out to you this week?
Well, the one that I enjoyed looking at the most was probably Incitec Pivot. I mean, this is a fertilizers and explosives company. And with my new sort of Chanticleer eyes on, just getting to sink the teeth into it a little bit. And I really struggle to think of another company that's exposed to as many things beyond its control as Incitec Pivot. It's got the commodity cycle, the mining cycle, the farming cycle, the weather, currency. There's so much stuff going on. It's not an easy business at all to run. It's got these big plants that are complicated, that have breakdowns. It's highly reliant on gas prices. So anyway, it had a bit of a soft result, softer than the market expected, and the shares were down nearly 10% on the day. What about you, James? What did you look at?
Oh, I looked at Xero and very impressed with the new CEO there, Sukhinder Singh Cassidy, who's a tech veteran. She worked at Google. She's run her own startups. I'm not quite sure how Xero managed to get her, but I think they may have struck a bit of gold here. She gave a very impressive sort of outline of the strategy, which is Xero has been chasing growth really above all else for most of its life, really, the last decade. She's coming in, she's just tweaking the dials a bit, trying to get a bit more of a focus on profitability, reducing some costs, better discipline around investing, and the investors are loving it. I think the stock's up 45% in the last 6 months.
Wow.
So you've possibly missed the boat on Xero if you're excited about it, but yeah, very impressive new CEO and an all-female CEO, CFO team, which I think is the only one on the ASX 200. And,
that is rare.
Great to see.
Cool.
All right, Anthony, well, let's get in to the first big story of the week. And this is one that has spread like wildfire, really, from the business pages of the Australian Financial Review to morning television and even the comedians and satirists had a go. It's the PwC scandal, in which the firm stands accused of using leaked secret government information to advise multinational clients on how to sidestep new tax laws. This story was, of course, broken by the AFR's own Neil Chenoweth and Ed Tadros, and our Rear Window columnist Joe Aston has been all over it. There's a great episode of The Fin podcast where you'll get a lot more details about the origins of this scandal. But Anthony, we're very fortunate on the Chanticleer podcast to have a PwC alumni in our midst. What did you do at PwC, and have you got any reflections on the scandal that's been building based on your experience?
Yeah, I did 4 years at PwC straight out of school. So I went in there as an 18-year-old and did a cadetship and sort of learnt the basics of accounting and auditing across 4 years, and it was great. I look back on those years fondly. I learnt so much about more about life than work, to be honest. Just what it's like to work in a big organisation, what it's like to have to get the train to work every day and work for these highly seasoned and experienced partners and managers. And I've still got quite a few mentors from those days and friends. But the thing I did learn, I think, the most is just about that microcosm of firm culture.
Yeah.
which it's the same at PwC as the other consulting firms, accounting firms, whatever you want to call them, and the law firms. And when you're a junior like me, you walk in the door and you see the partners with the officers around the edge of the floor, looking out onto Darling Harbour. It was at that stage. Now they look out over Barangaroo, and you see the partners in those offices, and you think, all right, well, the goal is I want to get one of those offices. I need to get there. You think that's the end goal. What you don't realise is that the games actually begin once you make the partnership. It just resets everything, and then that's where the serious games start. Then that's where the serious money is. And once you're in the partnership ranks, it's all about fees. It's pretty simple.
Yeah.
The biggest fee riders are the top dogs, and they're ultimately the ones that are paid the most, that have the most say, often in firm matters as well. So following this PwC story this week, and with that sort of experience from being in there, it's been really interesting. And now it's got to the stage where it's just the story you can't stop, right? It's spread like wildfire. Everyone's talking about it around town. There's just so many things that are worth talking about this story. I mean, chief of all is that PwC, what it's done to its biggest client in Australia, the government, the way it's taken that information and used it to effectively hurt the government's tax proceeds. It's just huge, don't you think?
Yeah, absolutely. One question I've got for you, Anthony, I've been talking to a lot of people about this in the last couple of days. Someone actually who was in the death throes of Arthur Andersen, which collapsed after being involved in the Enron disaster. One of the things they said to me was that the partnership model where, yes, there's a management team, but all the partners are owners and they sort of have a say. Some, as to your point, have a bigger say than others depending on what fees they write. But that model is different to a corporate model. It makes it hard to throw another partner, a colleague, a friend under the bus, for example. It slows down the decision making. Does that tell me with your experience?
Yeah, for sure. So you've got partners, and then you've got partners. Like honestly, 90% of the partners are just normal people like you or I. Go into work. They work really hard. They do the right thing by their clients. They're quite honest, very normal people that honestly they just worked harder than everyone else as they were coming up through the ranks and sacrificed more. And then they got to the partnership. Like, it's a big partnership. I think there's 900 partners. It's not that hard to get there, honestly, if you dedicate the time. So you've got the everyday partners, and then you've got the power partners, right? That play that internal game and go after the internal sort of postings. And then they're the ones that rise up to the top. But like I said, it's a real sort of unique microcosm. I mean, for me, the reason why this story's got so big is that it got to Canberra, and it involved Canberra from the start. So we've seen this time and time again. You have these big firms like PwC or the investment banks or whatever, and they have these sort of scandals there, and they think they're all on control of it. The story will go away. As soon as that story gets to Canberra, as soon as you get politicians commenting on it, particularly if it's the Treasurer or the Prime Minister, the story just goes to the next level. Everything becomes much more real, much more serious. I mean, in PwC's case, it's the biggest consulting firm. It's got so much sway in the market. But, the Treasurer was using words like absolutely furious, absolutely ropeable, completely inappropriate. Ironically, that's a treasure that we last saw in PwC's own offices, James, wasn't it?
Yes, indeed.
Back in March.
I think you make a really good point about the Canberra effect. We saw that in the Banking Royal Commission, Australia Post.
Yeah.
And this has really crossed over to the mainstream, and clearly PwC is not in control of this story at the moment. My question, Anthony, is whether this scandal starts to affect their relationship, PwC's relationship with corporate Australia, where they provide lots of tax advice, lots of consulting advice, and of course, audit services. Do you think corporate Australia can separate the different bits of PwC, the problems in the tax bit, but it's not in the audit bit?
Yeah. Now, obviously, I drank some Kool-Aid 20 years ago, and maybe I was a little bit brainwashed. But in my view, and I've been thinking about this quite a lot as well. I think that there's very much PwC is sort of split in different parts. There's tax advice, there's consulting work, there's audit. Now, audit is a mandatory statutory requirement for all companies of any real size in Australia. Okay, there's only four big audit firms, and if you're a big company, you want a big audit firm looking after you, or if you're a multinational with operations all over the world, you need someone with offices all over the world. PwC is always going to pick up that work because at the end of the day, there's just not going to be the capacity in the three other firms for PwC to disappear, and you can't just grow PwC overnight. So I think that audit work should remain pretty sticky. That's not the exciting sort of lucrative part of the firm for these guys. I mean, the consulting advice is much sexier. Tax advice, as we're seeing now, can be incredibly lucrative as well. So I think in terms of PwC's place in corporate Australia, I think for me it's just really hard to see its role as one of the leading audit firms disappearing. I don't think directors will be sitting around in boardrooms now discussing turfing PwC out on the audit side, but I don't know, maybe like I said, maybe I was just too brainwashed.
Yeah. Oh, look, I've hit the phones in the last couple of days and I've spoken with chairman, proxy advisors, other accounting firm bosses, and the sense I'm getting is that there's starting to be nervousness. There's starting to be corporate clients saying, is there anyone else we could use? Maybe it's better to just have a bit of clear air between us and PwC. And, you know, a chairman I spoke to, I gave him the sort of hypothetical example. An audit's coming up for renewal. Yeah. PwC's your current auditor. What do you think the conversation is? And he said, well, he would be fine saying, no, this is the two parts of the business, tax and audit, are completely separate, and we shouldn't, you know, the sins of one shouldn't be visited on the other. But he said there would be directors who would say, is there another option? Yeah. An advisor I spoke today put it really well. When you hire PwC, you rent their integrity. Yeah. And that badge, PwC, that goes across the whole firm, and you're renting that integrity, whatever part of the firm you engage. And so there will be investors and proxy advisors and maybe directors who say, how happy are we with the state of that relationship at the moment? Have we got comfort that we want to continue in those relationships? I think you're right. In most cases, people will say, yep, that you know, we're comfortable. We've had a chat. We're happy the situation's contained.
Don't forget, like companies like Macquarie, you can't just change auditor overnight. Like that's such a complex, big beast. And I've seen these audit files. They are rolled forward from 1 year to the next, to the next, to the next. Things like when you go into an insurance company and you're testing how they manage claims, you're just basically testing that, you know, what they did last year, they're still doing this year, which is, you know, all the right sort of risk processes. You can't just come in overnight and replace that. And PwC's also got such a big network in the market. Like I was looking at a company yesterday, AUB, the old Austbrokers, the insurance broker. It's worth $2.6 billion and it raised some money yesterday. I was just looking through its list of directors, and out of about 9 directors, there was 2 of those names I recognised used to work on the same floor at PwC level, level 14 back, 20 years ago. So the network they've got out there, I think will provide them some sort of buffer. Yeah, but where's this story go, James, do you think? Not just the story, like it's more than a story, obviously. Where's it all going? Like, is there a circuit breaker out there for PwC?
I think this is a problem. I can't see the circuit breaker. All I can see is bits where it gets worse. I mean, I think in the next couple of weeks we've got Senate estimates hearings where this is going to be raked over. Yeah. We've got Labor and the Greens calling for the list of partners, the full list of partners who are involved and the full list of clients who are involved. Yeah. That could take the story global. I mean, if you get some big multinational names on that, this story goes overseas and gets a life of its own. So that's the problem. I can't see the circuit breaker. That they possibly could have cauterized this wound a while ago by, getting rid of lots of tax partners, sort of really coming out in the front foot and saying, we were wrong, we've stuffed up, we want to make good. But instead it's been a very long, drawn out process. Oh, we didn't really do anything wrong. It's a perception issue. And as a result, they've lost control. So I don't know about you. I can't see the immediate circuit breaker that makes this go away. And Ziggy Switkowski, the former Telstra CEO, who's been employed to do a review of culture and accountability, that review doesn't report till September. So that review is not going to draw a line under it anytime soon either.
Yeah, and you know what? The fire is burning inside PwC. Like,
Yeah.
I still know a few people that work there, and through social networks and stuff. Like, it's a big firm, obviously. Mate, honestly, they are spewing at what's going on. First of all, what was done, it really was done years ago. How it's been handled, where it's left them today. These are people out there in the market that are, every client meeting they go to, their clients asking them about what's going on with this tax information.
Exactly.
How did it all happen? What's going to happen next? They go, they go home from work and their husband or wife or partner or whatever is asking them about it. They go to a barbecue on the weekend. Their friends are talking about it. It's amazing because this is the firm that is the undisputed number one in consulting and accounting. It's such a big player in the business community here, and we haven't seen it go through something like this.
No. And Anthony, you can guarantee the Fin's going to continue to be all over the coverage of this one. So stay tuned. We'll be continuing to unpack this over the weeks and months ahead.
Let's move on to our second big topic of this week. And the Reserve Bank, probably our favourite source of information, published the minutes of its most recent board meeting on Tuesday. And those minutes showed why it decided to increase the interest rates to 3.85% at the start of the month. Now, one of the interesting nuggets in there was that the RBA is worried about house prices rising again. Now, James, why do you think they're concerned about that?
Well, Anthony, this all comes back to the problems of how interest rates are transmitted through the economy. So when interest rates soared last year, house prices got smashed, and everybody thought that would continue into 2023. The sort of big predictions was from most forecasters was for falls of somewhere between 5 and 10% for house prices in 2023. But all of a sudden that's turned around, and it's because of immigration, where there's somewhere between 350,000 and 400,000 migrants coming to Australia this year, which is catch up from the COVID border closures. But what's happening is that is stabilised house prices. They are now rising ever so slightly, and obviously rents are surging, and we've got a major problem there.
Sure are.
But both of those are an issue for the RBA. Higher house prices make people feel wealthier. There's this thing called the wealth effect, and that makes them start to go out and spend more, which can help push up inflation. And then obviously surging rents are a big part of inflation. So this migration, the impact of this huge migration boom, companies love it.
Yeah.
Whether you're a shopping centre landlord or a supermarket or
Banks,
an entertainment business, they love it. But Anthony, we're seeing this immigration impact come through in lots of different places. And you wrote about one on Thursday. It's coming through in the employment data now too.
Yeah, you're right. It is a bit of a careful what you wish for situation with the immigration. But yeah, so the unemployment rate increased 3.7%. As at the end of April, up from 3.5%. It was an increase, but it was an increase off very, very low standards, sort of historically. Yeah. And RBA Governor Phil Lowe, I mean, he would say full employment. So that's the level, as economists see it, that's about the right level of people looking for jobs and businesses looking to employ them. The unemployment rate should be in the 4s. We're at 3.7, so we're still basically tight jobs market. But the other stat that came out was the labour force participation rate. So that's the portion of working age people able and willing to work, was 66.7%. Now, the fact that participation rate was unchanged, that suggests that this higher sort of net overseas migration is encouraging stronger participation. So more people basically in the labour market. But on the whole migration point, I was chatting to a recruitment company this morning, and they reckon that it's only at the start in terms of getting people in the door here. So the government's done a lot of things that are going to help in opening the floodgates. So, getting visa approval processes down to 1 month from 6 months, which is sort of 1 month is about what they were before the COVID pandemic. So all that sort of infrastructure in place. But this CEO, he didn't think that the sort of floodgates had opened in terms of getting people in yet. That's a sort of next 6 months, 6 month story.
Just to clarify, Anthony, you weren't talking to the recruiter looking for a job, were you? You're not going back to PwC?
It'd be interesting to know if they're hiring or what at the moment, because they'd definitely be losing staff. But then it was also a really soft environment. And I know we finished talking about PwC, but just the other really interesting thing about PwC at the moment is they're coming up to partner promotions. They happen at June 30 every year, and that's the system that keeps the whole firm running, right? But because it's a tough year, or their outlook's a little bit tougher, slowing economy and everything, there were going to be fewer partner promotions this year, which is also like a shedding jobs kind of environment. So anyway, just another challenge. Yeah. But back on the housing market, James, we saw a bit of talk this week from the former boss of the property construction giant Mirvac, Susan Lloyd-Hurwitz. She was also head of the Property Council as well, and didn't she come in swinging into the property debate?
Yeah, I mean, she was talking about curbing tax breaks for property investors, which is something that is quite sacrosanct in the property sector. Yeah. This is I think this is the right debate to be having. We clearly have a housing crisis going on in Australia. There's not enough places for people to live, whether they're rentals or homes to own. Yeah. We've got all these new people coming in. This is going to be a problem for 5 years. Yeah. And then you look at the construction sector, where builders are going out the door backwards at a rapid rate of knots. I mean, I really worry about this one.
Yeah, and if you speak to the banks, the business banks will tell you that, because they have a pretty good line of sight as to how many construction companies are lining up funds so they can build things. They reckon there's just nothing in the pipeline. So that means nothing significant gets built for 5 years. Yeah.
And then you've got this broader problem of infrastructure around the country, which is creaking already, and the migration keeps building. So this is going to become a really hot button issue for industry. Yeah. But also for politicians. I mean, this is another challenge for the government. And also, as we said at the start, this is a challenge for the RBA. They've all these countervailing forces that they're trying to get inflation down, but migration is starting to work against them. Does it countervail the slowing economy? I don't know, but it's another sort of data point in the matrix for poor old Phil Lowe as his contract comes up for renewal, and maybe he needs to go see the recruiter. Who knows? Anthony, let's finish this one with our mid-month question. We're still a few weeks off the RBA's next decision, but given our prognostication was so good in May, what are our early thoughts?
All right, so inflation has peaked and it's trending down.
Yes.
Jobs market peak, trending down. These things are headed towards that narrow path that the RBA is talking about, right? That soft landing, that dream scenario where we get back inflation back under control mid-2025 and unemployment at about 4.5%. But the May meeting minutes that were released this week, I mean, the board discussed two options, right? Pause or rise. And the board, the minutes made it pretty clear, I thought, that the board thinks the economy is still pretty hot, okay? So I'm not normally a fence sitter, but I'm really torn on this next rates call, because from a high level perspective, things look on track, right, for the soft landing. But the minutes say the board's concerned that everything's still running hot. So I mean, can I sit on the fence for another week, James? Or
you can, of course. Well, you can be like the RBA, data dependent. Yeah, that is your right, Anthony. I'm going to sit still in the hike basket. I'm still on the hike side of the fence. I know. There's a lot of
meeting minutes.
I know there's a lag effect. I know we still haven't felt these rates come through. I don't know. Maybe it's to me. Does the RBA sort of? This is the problem with monthly meetings, by the way. That they risk getting caught in hike pause as the data comes in. Maybe that's okay to be data dependent, but I think we're getting close to the end of the cycle, but I think there's one more hike in it. And I just don't understand why you'd wait. I think it's better to rip the Band-Aid off, get it done, then pause for a long time. So who knows? We'll allow you to sit on the fence for another week, Anthony, and then we'll get your prognostications as we head into the start of June.
Thank you.
All right. Well, we're going to come back after the break with a very special event next week. There's an important list coming out for its 40th edition. We'll look forward to that right after this. Okay, Anthony, the week starts for us at the AFR with a big mining conference. The caravan is off to Perth for our first mining summit in Perth. It's going to be very exciting. I am talking to the chairman of Rio Tinto, Dominic Barton, which is going to be great. Hasn't done too much in the way of interviews, and he's almost said, ask me anything. So we're going to have a lot of talk. It's the 3-year anniversary of Juukan Gorge disaster is coming up, so we're going to have plenty to talk about. Anything you're looking to find out out of the mining summit?
Well, yeah, maybe you could ask that chairman what advice he has for PwC, because they were the story a couple of years ago. Out of the mining summits, no, but I'm really interested, and it's great to see that you're going over to Perth for it, and it sounds like it's going to be quite the event.
Yeah. One other thing that might happen next week, because this has been an ongoing saga, Anthony, is the takeover of a payments group called Tyro, which provides payment devices. You've probably seen them at my two favourite places, the pub or the doctor. Mm-hmm. Anthony, there's a US company sniffing around here. Are we finally going to get a deal this week?
Yeah, and they're also on the taxi receipts. Look at your taxi receipts. There's Tyro all over them. Private equity's been sniffing around Tyro. I mean, they put them in play probably last August, and these talks have been dragging on and on and on. The deal's been a few days away for the past 6 weeks. And I think it's finally at the stage now where Tyro's got all the information out, and it's now just up to Potentia to decide whether or not it's going to hit the price that Tyro's board will agree to. And there's a bunch of Tyro shareholders they've seriously just had enough. So it feels like it's the time where Potentia now and Tyro, both of them, have to decide, look, after all these talks, months and months and months, are they going to get a deal done or not? If so, good, hurry up and agree it. If not, see you later. Let's get on with life. What
does your instinct tell you? Does Tyro marry Potentia in the end?
I think so. Look, Potentia's obviously stuck around for so long. They're really keen to do it still. I think Tyro's board's been pushing for a price. It's that sort of $1.75, maybe a little bit more. And the shares are trading at about $1.54 this morning. So it's still a bit of a premium as to where they are. The fact Potentia's stayed around as long as it has, I think they're pretty keen to play.
Yeah. All right, and the big list coming out next week is the 40th edition of the Rich List, which is, of course, in the AFR magazine, was formerly in the BRW magazine, which is where I started working 23 years ago, and I'm a former Rich List editor. I do love the project. I reckon it's the biggest and best annual project in Australian journalism, and I've written a piece for the magazine looking back at the 40 years of Rich List. It's amazing, Anthony, how the list has changed. I mean, it used to be farmers, media, rag traders. They were at the top of the list, and now it's miners and tech stars. It's a fascinating scoreboard of how Australian business changes.
Yeah, it's just such a good addition, isn't it? And it's always a talking point around the market. People love seeing who's supposed to be worth what. Like it says. Like it's just at the end of the day, it's a list of names, but it says so much about Australia's economy, Australian business, where the world's headed.
Yeah, we'll dive into a few highlights for you on next week's podcast. Well, if you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Friday, the newsletter pulls together the best Chanticleer columns from the week and from this podcast and delivers them straight to your inbox. And it's that time of the week. We love our questions here at the Chanticleer podcast. And this week we've got an audio question from Martin Healy from Melbourne.
Hi, Chooks. This is Martin from Melbourne, and I'm an avid listener. Thank you. I'm looking to put extra funds into my superannuation, my industry super fund, but I keep hearing that super funds have overvalued assets that are due for a correction. So, should I wait until later in the year?
Great question, Martin. Now, this is a serious issue. We have been talking about this, that we expect the values of private equity, venture capital, infrastructure, real estate investments that the super funds have made will need to be revalued down. And so that will affect the exit and entry prices of super funds. I think what I'd say, though, Martin, is it's very difficult to get your timing right on this. When those revaluations come through isn't a precise science. You would expect them to come through on 30 June, but in fact, the revaluations on private equity and private and venture capital, for example, won't come through till later in the year, more around September. So it's difficult to know exactly when to do it to get your timing right. And the other thing I would say, don't worry too much about timing it. Super is an investment that you hold for 10, 20, 30, 40, 50 years, depending where you are in your time of life. And so getting it right by a few weeks or a few months probably doesn't matter. Anthony, anything else Martin should be thinking of?
Well, the number one thing that hits my mind around timing super contributions is just that concessional contributions cap, which resets at the end of the financial year every year. So under that cap, you get about $27,500 in concessional contributions, which come from your pre-tax income. And anything more than that, you're paying into your super from after-tax dollars. So, and it resets every year on 30th of June. So, if I was, the only thing to think about timing your super is, how that sort of limit plays in.
Yep. Worth getting some advice from an accountant, Martin. And we should say the advice we're providing, of course, is general in nature, and get some more specific help from that. Including from your super fund. They'll be able to give you a steer as well. Thanks so much for your question, Martin. We love to get your questions. And if you have got one to send in, you can email us at chanticleer@afr.com, and you can also send us a question in audio form as Martin did. Just record a voice memo on your phone and include your name and where you're from and email it through to us. Well, Anthony, a massive week. Thanks so much for your insights and a bit of history on the PwC saga. It's great to have a member of the alumni network with us.
Yeah. Thanks, James, and enjoy your trip to Perth next week. I hope the travelling chook gets there and the mining summit goes well.
Very fantastic. Thanks everyone for listening. We'll be back with you next week. Well, if you like the podcast and you want to hear more, consider rating and reviewing us, as it helps others find us. And follow us wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson and Anthony Macdonald. The producers are Lap Fan and Alex Gow. Our theme music is by Alex Gow. See you next week.
The Australian Financial Review.